Hey guys, welcome to the Startup Tank Climate Investor Pitch Show. If this is your first time, we're like Shark Tank or Dragon's Den for climate companies. We do this every 2 weeks and feature incredible pre-seed to pre-series A climate startups on here to our panel of climate investors. If you're looking to raise funding, trying to help your company grow and scale, well, my camera looks terrible, but it's duct taped together and that's what we're doing. So forward.vc, I run Climate Accelerator, and we help companies grow, scale, and change the world through our network and that of our 170 plus mentors. You can find out more about those folks and how to apply at forward.vc. We've also got a climate VC database, which we've published there. So if you're looking to raise money, it's probably the most extensive list out there. You can filter by stage, sector, geography, and check size to find your ideal investor. That's at forward.vc. And this, at the Startup Tank, we bring on investor panelists, incredible companies, and we try to get some deals done, some exposure, and move the space forward. Today, I'm joined by 2, possibly 3 incredible investor panelists. We'll have to see who all ends up showing up. Nabila Merchant with the Pollinator, TELUS Pollinator Fund for Good, and Gabriel VanLoozen with Powerhouse Ventures. I'll bring both of them in and give them a chance to share a little bit more about themselves, what they're doing, then share a bit more about the Startup Tank, our format, and jump into the incredible companies we've got planned. Sound good? Nabila, do you want to kick things off and share a little bit more about yourself and Pollinator?
Absolutely. Thanks, Matt. Hi, everyone. I'm Nabila. I'm an engineer by training, VC by trade. Got into the sustainability space pretty early on with just a passion for renewable energy that led me to degree in engineering physics, wanting to research solar cells and renewable energy. I hopped onto the commercialization side pretty quick, realizing research not for me, and have spent the last 6 years in VC. First with Relay Ventures, investing and supporting growth of early stage technology companies like Seven Shifts and Greenlight. And then in 2021, joined the TELUS Pollinator Fund to combine my passion for sustainability with investing and help the next gen of startups building tech for good. So we invest 100 million into businesses addressing climate change, agriculture, healthcare, and inclusive communities. Looking forward to the pitches today.
Awesome. And Gabriel, Powerhouse. I'm sure a lot of folks know it, but you want to share a little bit more?
Absolutely. Great to meet everybody. Briefly, my background, I started my career on the mobility side of things, spent about 5 years at Bosch before focusing on utility scale project finance while studying law and business at University of Michigan. Spent a year on the ventures team at Anthesis, which is a London-based sustainability consulting firm for a year after grad school before joining Powerhouse Ventures last July. At Powerhouse Ventures, we're an early stage climate tech fund, and we back pre-seed and seed stage founders who are building software to transform energy and mobility systems. And so basically software that decarbonizes, democratizes, and digitizes energy and mobility is our focus. We launched our second fund last year, about a year ago this month. This is a $75 million fund. Our checks generally range between $500K to 2 million, and we're open to leading, co-leading, following. So we're pretty collaborative in the role that we take on the investment side. We're also supported by Powerhouse, the innovation firm, which is affiliated company. Basically, they're a boutique innovation consulting firm that work with large corporates and energy and infrastructure providers on innovation and startup consulting work.
And then on our side, I run Forward VC, we're an early stage climate accelerator. We invest in 1 to 2 companies a month. We do pre-seed and seed, Europe, North America, and Israel. And our goal is through our network, 170 plus mentors, folks who are high up at places like Porsche, Honda, Lufthansa, HSBC, JetBlue, Johnson Matthey, DOE, et cetera. We to cheat and help our companies get plugged into corporates, plugged into industry, plugged into government, so that we can decarbonize at a large scale very quickly, because otherwise we're all screwed. So we may as well play on Team Planet together. If you guys are interested in learning more, forward.vc. And now we've got 3 incredible companies slated to pitch tonight. We had a couple of last minute dropouts and some technical challenges. So we'll give the companies a little extra time. Normally they've got 5 minutes to pitch. We'll give everybody 7 minutes. How does that sound? Awesome. Then I would kick things over to the first company of the night, Clement with Clip Bikes. They're doing some pretty incredible stuff to make e-biking faster, easier, cheaper. And with this, at the end of the night, we'll have a startup of the night where we vote our panelists, Gabriel, Nabila, and myself, on our favorite company, and they'll be crowned to the climate startup of the night and live in eternal glory forever and ever. And ideally, the investors that are tuning into this, if you're interested, feel free to reach out to them. It's generally founder@company.com. So without further ado, I'll hand things over to Clement. Clement, you want to take things away and tell us how you're looking to kick things off with the e-bike revolution?
Great, thank you so much, Matt. So, and I think I can share my screen, correct?
You should be able to.
Okay, that's great. So let me try. And if you can please confirm that you can see.
Looking good. Take it away.
With the clip. Okay, thank you so much. So I'm Clem. I'm the co-founder and CEO of Clip. And Clip is the world's first plug-and-play device to upgrade any bike into an e-bike. So you all know that Paris and the Parisian voted this weekend the end of e-scooters. We do believe that bikes are the best platform to move in a city. Now, bikes are, for most people, too much effort. That's why we invented Clip. So Clip is a plug-and-play device, a portable device that you can attach. I'm going to do it for you right now, starting with the Bluetooth remote. And then the device itself that you can attach to the front wheel of any bike to transform the bike into an e-bike. That's, you know, quite easy to do with personal bikes or any shared bikes. When you are done with the ride, you can just detach the device from the bike and continue your life. The bike is exactly as it was before you attach the motor. Clip will give you 15 miles, or I think it's 24 kilometers per hour speed for 10 to 15 miles. So I think it's close to 20 kilometers. It, of course, costs a lot less than a conventional e-bike, standard e-bike in the US, but the same in Europe. The average price is between $1,500 to $2,000 or euros. Clip is sold today for $500. So the mission of the company is really to make it very easy, very accessible for any commuter to switch from polluting ways of commute to their bike. In the world, there are a bit more than 2 billion bikes for 1 billion cars. 80% of commuters in Europe or in the US have access to a personal or shared bike. So it's absolutely a huge market that can have a huge impact because the commutes, you know, in cities are less than 6 miles and contributes to a bit more than 30% of green gas emission. You know that this market is huge today. It's going to keep growing in the future. Again, by nature, bikes are the best vehicle for city urban commutes. So today is a 49 billion market for e-bike. It will be in 10 years close to 100 billion. So. Clip doesn't have really any comparative similar product in the market. You need to buy an e-bike that is a lot more cumbersome and expensive, or you need to transform your bike into an e-bike by changing the front wheel or adding different attachments. It's a lot of DIY. So Clip is the first plug and play device and the only one at this moment. So here we see the different alternatives for e-bikes or for DIY kit, a lot more expensive. not very easy to use or to install. So we, after a few years now, because we founded the company in 2018, we are ready to scale productions. We launch a bit more than 200 units in the US. The feedback from our customers is absolutely excellent. We have people starting biking after 50 years. I think I have some picture of them. Here are some picture of our customers, people who started biking after 50 years, people who decided to totally switch from their car to their bike to commute every day. We have the CTO of Burning Man, who organized the festival in the desert, in the Black Rock Desert in Nevada, with his bike and with Clip, I think clocking a bit more than 500 miles last
1 minute
year
warning.
with the unit. So we are right now raising a fund to scale production. We have a bit more than 1,000 pre-order. We can produce 250 units a month at this stage. This is what we are doing this month. We can scale to 500 units a month this summer and getting closer to 1,500 units at the end of this year. So we are raising 1.5 million. We raise a bit more than 900 at this point, and we think that we will get the remaining amount by the end of this month. We have a WeFounder, so crowd equity campaign online, of course, and pitching
Time is
and having like a few. Yeah, thank you.
How much are you trying to raise?
1.522 million.
And do you have any committed yet?
We have 900,000. So
perfect.
Close to 1 million at this point, yeah. And we have visibility, I will say, for the rest before the end of this month. So it's just a great timing for investors at this point, because we know 90% that this round will close in the next 3 weeks.
Perfect. And it looks like Puja is going to be joining as well. I'll let him do an introduction in a second. But first, Gabriel, you want to take things away with questions? And for questions, feel free to jump in whenever. There's no real format for this, guys. So if you've got questions, just take them away when you've got no need for hands, etc.
Perfect. Well, Clem, really appreciate the overview, and definitely an interesting product. I'd love to just hear a little bit more, kind of understand that scaling production is sort of the use of funds for this round, but we'd love to just hear a little bit more around the manufacturing strategy and how you're approaching that. If you're doing it in-house, working with partners, just a little bit more color around that.
Yes, so we are using a 3PL based in India, southwest India, a 3PL that produce parts for larger companies like BMW, cars company. We are today in a conversation with an investor / manufacturer. My co-founder, who is Indian, is in India right now to finalize this manufacturing / investment agreement. They are a very large e-bike company in India, manufacturing and distributing in India, which is the first e-bike market in the world, as you know. So we have a visibility with our current manufacturer to get to scale to 500 and 1,500 by the end of this year. So this is our conservative, I would say, alternative. But if this deal goes through, I think we will be faster there, combining basically both assembly lines. At this point, we produce clip with 4% defect rate, so it's really low for hardware products, and we have a clip produced for a bit less than $300 for a price that was $549. So we currently make significant margin on each unit we sell.
I jump in with the question. Huge fan of bikes, especially for the last mile commuting. I'm curious about your decision to build for North America. If you could share a bit about the thinking around your market approach and how you plan your future go-to-market, that would be fantastic. And any color on the 100 to 200 units that you have in use right now, if you know how people are using, if it's recreational versus commuting.
Yes, so we are based in North America. We are based in New York. This is Brooklyn, shipyard, Navy Yard. We implement a D2C, a direct to customer approach with a network of promoters that earn a commission promoting Clip. So this network of promoters includes large bike retailers, Decathlon in France or Europe. It's REI in the US. It includes also bike shops. It includes also ambassadors. Like
they're promoters or distributors? Are you selling to them? That sounds different.
No, yeah, we call it promoters because we implement a D2C with them having a pop-up store, for example, in Decathlon, okay, where we get, all the data from the customer. The sales is actually registered in our system, not in Decathlon system, or not in the bike shop system. So we get all the advantage of being a pure D2C, I would say, company. But at the same time, we benefit from channels that are already established. Sorry for the noise. 60% of all e-bikes, all bikes accessories are sold in bike shops and retail stores.
And then in terms of the market for, or how your bikes are currently being used today, how do you see that so far?
Yeah. So it's clearly an early adopter market at this point, and we are just starting. So we have 200 units sold in 38 states in the US. So it's all kind of geographies, conditions, and customer profiles. So we have people who are retired and use it as a recreational, way to catch up with the kids or with the grandkids, but 60% of our customers are using it daily for commute.
Just to follow up and dig a little bit more into those kind of ideal customer profiles. So kind of hearing that you're, targeting broadly any commuter, talking about benefits in terms of kind of last mile urban commuting. And it sounds like sort of in data gathering mode right now on like which are the kind of ideal profiles for longer term scaling. And so just kind of wanting to make sure that that's a correct understanding. If there's sort of any like sort of subsets of customers that you think are particularly attractive, why not, and kind of like what your ideal customer profile is with the data that you have so far, if you have kind of a conclusion around that.
So I guess you are a mobility guy. You are interested in mobility. I'm sure you bike. When you bike in cities, people stop at the traffic light, start maybe with a comment on the bike. Clip is a statement. When you see it on a bike, it's definitely something that you see. Okay. So this morning, I commute use it. I was stopped like 2 times, for people asking me what is this, someone try it, on my bike this morning. So it's a product that I think a early on will sell like this, just through word of mouth and people using it. So naturally, we haven't spent any money on marketing. We have like a bit more than 1,500 pre-orders. Naturally, you know, this word of mouth start working. I think that we are going to continue structuring and so targeting like people who are similar in a way, people who commute every day in large cities. So in New York, for example, it's like close to 1 million. You know, there are 12 million people in the US who use a bike at least twice a week. So it's a very low impact in terms of cost. You know, it's not expensive to structure ambassador program, to have, for example, barcodes, you know, that people can scan to get a discount and so buy and sell, promote the product this way. I'm not sure I understand. I answer perfectly.
Who buys this versus who buys this versus a standalone e-bike?
So a standalone e-bike, yeah. It's you know, it's 4 times less expensive than an e-bike. And e-bikes are stolen, you know, every 30 seconds in the US. An e-bike is stolen, you know. Any e-bike sold today will be stolen in the next 18 months. It's a lot of constraints to have an e-bike in a large city. I think like a lot of people who are interested today in buying an e-bike will eventually be interested in buying Clip. Yeah.
What kind of reaction have you gotten from investors, and why did you have to go to WeFunder? I feel like everything about this screams obvious. It seems much better than an e-bike for just about every reason that you said. If I'm going to steal a bike, I'd rather steal an e-bike. It's not as heavy.
Yeah.
It's cheaper. Yeah. It's easier. It's lighter. It's better for the environment. Why is it not exploding?
So we raised 2 million in the past, and we are raising 2 more million now. For a hardware company, it's in this kind of context, it's good. I think we have a good level of traction from investors. Clip is built for the world. You know, our goal is to impact climate change. We want the world to own a part of it. It just made sense for us that WeFunder or crowd equity platform was the perfect way for us to have more people align with the mission joining us.
What kind of results have you got so far from that?
From WeFunder, we raise a bit more. So in total, we raise on this round a bit more than we are close to 900,000. From WeFunder, I think it's a bit more than 130. We just started. You know, it was like the campaign was, I think, launched publicly 1 week, 2 weeks ago.
Why WeFunder versus crowdfunding? Just letting people pre-buy the product. And any other investors or panelists, just jump in when you want to jump in. Sorry, I just had a bunch of questions.
Crowdfunding, they will, you know, in a way, be a stakeholder, but they are shareholders, you know, with WeFunder. They own the company, you know. So that's, for us, it's another level of involvement. You know, it means a lot for us to have like people like believing in the mission to the point that they want to have a share in this company.
I have a couple questions. Sorry, I'm coming in super late and I'm pretty sure I missed the main portion of your pitch. But based on some of what you had just said, I guess I was curious about, so you talked about one on the go-to-market strategy, like a few different like ways of doing that. So one was via, it sounded like you said channel partners. but with like Decathlon,
Yes.
REI, all these. So can you go into more of like what's the structure of those partnerships actually? Is there some sort of commission model or something like that? So would love to know about that. Then the other was you talked about like the D2C and how you're planning on encouraging some of that viral sort of sharing with the QR codes on the bike. So tell me more about some of those organic methods. And then finally, on the actual kind of product, and again, I apologize if you already went over this, I'd love to know how easy is it to like actually retrofit? How does this actually get around the challenge of things being stolen? Is it just not a high value enough item? Or like, I imagine it could be like, if it's easy enough, you could just kind of like take it off and that would actually make it easier to steal. But like, or it might get lighter and easier to carry. I'm not sure, but but maybe you can take it off and take it with you inside. I don't know, but like
That's the actual product. They take it off and take it inside.
Okay, there you go. Okay, so it's really easy to retrofit and take on and off then. Great. So, okay, so then just more the go-to-market questions.
Okay. So that's really easy and unique. So no one else, has or even a similar alternative. The only other way is to buy an e-bike or to transform your bike, in the way that it becomes an e-bike forever and always. Okay. Here we don't want to block people in a different lifestyle. Most of the people who bike every day, they like their bike and the experience. They just need a little boost from time to time. So this is Clip, our first plug and play, a portable, very powerful device that you can have in your backpack. The approach is D2C, direct to consumer, because we need to understand better how people use it, who use it, etc. Now, the bike and e-bike market is structured in a way that most people buy their bike through retailers. So we partner with big one, with manufacturers. So I didn't mention them initially, but we have a partnership with people in the US who build and sell 50 to 100,000 bikes every year. Now, the way we partner with them for the distribution is to have a Clip as a pop-up and a physical pop-up in a pop-up store in their store, so all the sales, all the information goes directly to our system. The sales is actually recorded. They don't have inventory. We ship everything from Clip. Same with bike manufacturer and distributors online. You can buy a bike and buy a Clip, on their websites, but the backend is actually our, Shopify. The sales is recording, all the data goes to our system. So that's the way we do it. It's also a way to limit what we could call the margin or the commission. So the bike industry is usually around 40%. We are speaking about 50% right now. And in the US, it's possible with even a very large retail. The Walmarts, for example, they provide the same kind of mechanism and distribution agreement for similar commissions. It's a huge market that is very easily accessible through D2C and hybrid D2C, I would say. Sorry.
No, that's great. Last question I have is just what are your immediate next milestones?
So right now we are closing this round and scaling production. We have 1,000 pre-orders, so we are going to deliver them this summer. And then our milestone for the year is 7,000 units sold and delivered this year. We want to be closer to 20,000 next year by launching the product this year. Like a few units in Europe, but certainly like a massive launch next year.
And if I could jump in, I don't believe you had a chance to chat about the team and skipped over a bit in terms of IP. Could you talk to us about who's building this and the defensibility of the product?
Okay, okay. And you can you still see the screen?
No.
Not anymore.
No, not anymore. Okay, okay. I very quickly reshare this one. Can you see the pictures? Yeah. Okay. So my co-founder is Som, MIT product guy. He spent like the last 15 years building e-mobility solutions, well shares, tricycle. Sorry, I was looking for the names. Several commercial products. I spent the last 15 years in green tech, green energy, green mobility. Was also part of a social impact fund. Then we have MIT engineers, Eric and electrical engineers, and we recruited last year a veteran of the supply chain industry who worked for Motorola, Amazon, with AK. Part of the raise, the money we raise will be used to hire marketing director and certainly an electrical engineer.
What do you view as the biggest risk in the business? If you fail, why will it be?
Yes, so the supply chain, you know, for e-bike is difficult to navigate at this point. So we try to delink clip as much as possible from the supply chain. The difficulty, you know, for all our hardware company, you know, in mobility, is to raise money. It seems that we are, you know, on the good path now. After this raise, the company, you know, should be profitable, and we may have to organize the last round, the Series A, to really launch clip in different geographies. But that's also definitely a challenge for hardware company.
Are you worried about raising a Series A after doing a WeFunder round? Generally, it sends negative signals to investors.
It's a mixed round, you know. So WeFunder is a part of the money we raise. So at this point is like what, 15% of the money we raise. The rest of the round includes like entrepreneurs, you know, this manufacturer, so fund, climate fund. We have like I think a ton of how do you say, credibility, you know, going this way. Yeah.
Awesome. Any last questions for Clip, folks? And Clement, thanks for taking the time coming on, sharing what you guys are doing. It's very interesting because I would love to have an e-bike, and I don't want to buy an expensive e-bike. And
Exactly.
Everybody already has a bike that wants a bike, so it's a very, very cool model. I like what you guys are doing and wish you all the best. I'll pass things over now to Emily with Caravel Bio to share how they're reinventing the future of materials in a big way. You want to share what you guys are doing, Emily?
Yes. Can you all hear me?
Yes. And you get 7 minutes instead of the usual 5. So tell me when you're ready to roll.
All right. I'm going to set a timer on my end too. Can you all see my screen normally, or does it have the bottom stuff on there?
It has the bottom stuff. Not a huge issue, but.
Okay, cool. I'll just present from this view.
Awesome. Take it away.
All right. So hello, everyone. I'm Emily, and I'm representing Caravel Bio today. So it may surprise you all that 85% of the vanilla flavoring that we love and know today is made mostly from petroleum. And that kind of other 15%, most of it is made from a wood waste product that's still not considered natural, and really only less than 1% of it's natural. And so as you can see on the right here, companies are committing to sourcing or removing artificial flavors and FDA certified colors from their food. I'm based here in Boston. Dunkin' is committed to removing artificial dyes from all flavors. From all donuts. And this is true for many different companies and many different flavors way beyond vanilla. So let's talk a little bit about how you would make natural vanillin. And vanillin is the precursor and the largest component to make vanilla. So that's called conventional fermentation. So traditionally with fermentation, you have a carbon source, and then you have something called living microbes that are alive and they make the desired product, but they also make waste because they're not perfect machines. And so there's a lot of unspecific products that are produced in addition to vanillin. So when we think about three factors that contribute to the costs, very simply, there's the food, there's the feedstock chemical, and then process costs and inefficiencies. So if you were to buy vanillin made from a bio-based source, it would be around $300 a kilogram. And that's compared to the natural vanillin pod or vanilla pod that can be anywhere from up to $25,000 a kilogram. And so the problem with this and many other sustainable products is that it's just too expensive for people to use. And without driving down the costs, we're going to have a big issue with impacting climate change. And so our technology is an innovation called cell-free systems. So as I mentioned, living microbes make up fermentation. Cell-free is based on a non-living organism or enzymes. And we're doing cell-free systems a little bit differently. And so classic characteristics of traditional cell-free is you have 100% theoretical desired product, and there's really no microbial waste in most cases, and you can recycle these enzymes. So traditionally, cell-free systems are made with enzymes, non-living. And so when you think about the techno-economics of a cell-free system to produce vanillin, we remove the food for an organism because it's no longer living. We can use cheaper feedstocks because our process allows us to break down cheaper products to create natural products. And we remove a lot of these process costs and inefficiencies. So we believe with just this process, we can reduce the cost to around $25 a kilogram. So going a little bit into our technology, we have invented a system called spore display of enzymes. So when we think about cell-free systems, there's kind of two levers to think about for optimum productivity. The first is just how productive is the enzyme at making the desired product, and then how long does the enzyme last? And these are typically two different fields to optimize these efficient machines, material science and synthetic biology. So our system combines all of these into one process step. So the way we do this is we engineer bacteria to make a large amount of desired enzyme. Traditionally, that's how you would do cell-free. The bacteria then assemble an enzyme onto a support structure. So the benefit with an enzyme and the way it lasts longer is that it freezes, and you tether it to support structure, and that's how it'll freeze. And then this cell basically bursts open and you're left with spore displayed enzymes. And so let's kind of zoom up a little bit and think about how this would work in a bioprocess. So we'd scale our enzyme and support production similar to how you would do enzyme production in traditional fermentation, but we would also do our support structure. Then what we would do is we would do something called continuous stirred tank reactor systems, and then out would come vanillin. So this is compared to, in a traditional process, they'd use something called batch fermentation, and batch fermentation has a lot of process inefficiencies, as you saw in the beginning. But primarily the benefit of continuous reactors is you're spending less money on the actual reactors, so building the systems, but then you are constantly running the system. So you're always getting a product, which allows for less downtime. So when we think about our go-to-market strategy, our vision is to completely redefine the bioeconomy. And as I mentioned before, a big issue with the bioeconomy is just cost. A lot of companies have tried to scale and just ultimately can't compete with petrochemical equivalents. And so that's why all of these products have not been used. So our strategy is to first do pilots with the flavor and fragrance industry using products like vanillin, and we've targeted many others. And then we plan to go into biomaterials, so textiles and plastics, enzymatic mining, And then our kind of holy grail that we see for the very far future in 2040 is to go to creating sustainable aviation fuels and maritime fuels. And so really where we see our value is taking degrading waste products, such as wood waste or plastics, and converting them into low value and high value chemicals. And so quickly, I am Emily. I'm one of the co-founders. I'm an MBA candidate at Boston University. I'm joined not today, but I have a co-founder who's a PhD candidate at Tufts University in biotechnology engineering, and he has been one of the inventors of this technology. And previously, here's my experience. I worked at Google, SIBO, Verily, and Ginkgo Bioworks. And then just briefly, right now, we have demonstrated proof of concept. So what we'll say is feasibility, that this works with various different enzymes to degrade heterogeneous substrates. So those are solids, such as plastic and lignocellulose. But what we're raising is basically to show competitiveness of our system. All right. We'll stop there.
Awesome. Thank you for sharing. It's incredibly interesting what you guys are doing. You said $25 from $25,000 is kind of the target savings.
Yeah, so 25,000 would be if you were buying vanillin from the vanilla pod, and that can usually range from 5,000 to 25,000. It's really determined by climate. So the irony here is that climate's actually killing all of the natural sources of all the ingredients we use. So from oranges to avocados to vanilla. So that's where the 25,000 is. That would be the upper limit. Fermentation, though, is $300 a kilogram, roughly.
Okay, understood. And Puja, you missed last time. So tell us more about yourself and Carbon13, and then take it away with some questions. Sound good?
Sounds great. Okay, I guess that puts it on me to start with the questions. But I'm Puja. I'm from Carbon13. We're an early stage climate tech VC, and we also run a really early stage venture builder. So where we bring in founders to come in and start climate tech ventures. And then I run the venture launch pad, which is our accelerator, where we bring in existing kind of early stage climate tech companies, put them through a 10-week accelerator and invest in half of them we put in first checks. So that's us. And our only thesis is that every company we fund needs to have the potential to mitigate 10 million tons of carbon per year at scale. So we have every company that kind of goes through us and pitch us both an investment case and a carbon case. And we're pretty rigorous about, especially the second. And so anyway, I guess in terms of questions for you, I think this is so exciting. I mean, like, wow. I guess I'm curious about what is the exact product that you're selling to, like, so you said you had, fragrance and fragrance and flavor industry. So are you exactly, is it a licensing model? Are you selling the end product to chemical companies as an input? Yeah, tell me about how exactly a business model works.
Yeah, so initially, and even in the midterm, we would be creating joint ventures. So kind of both. We would bring the underlying kind of technology and the bioprocess, but we would not be selling the chemical to those companies. We'd be creating the chemical with them, but they would be handling kind of the sales of the end product to the next buyer, which would be the flavorists.
So joint venture.
And then yeah, exactly. But then in the long term, we do envision us creating our own plant so we can kind of get the whole benefits of our system. Just with the kind of reality of synthetic biology, we know that there's a lot of R&D we have to do and a lot of testing. And so the best way to kind of share in that risk is to pilot it and share in some of the value we can create.
Super exciting. I have some other questions, but I'll let it move on to the others.
I wouldn't mind jumping in real quick because you did mention R&D, and that was a big question for me. I'm curious how long and from a time and money perspective, how many resources you have to dedicate to developing a really robust process for one particular flavor. How does that expand to other flavorings? And when you move into fragrances and now you want to move into bioplastics, is any of that information transferable, or are you starting from scratch each time?
Yeah, so one of our milestones is to build out something called the high throughput selection platform. And what that means is that we can take our spores and enzymes and quickly figure out any variant that works the best in a bioprocess. So, with AI and ML being very big these days, the value here is that the more data we generate ourselves, the more we can put into our algorithms to determine what spore enzyme variants are similar. And the key here with kind of how we get more efficient with generating our products is we plan to use the same feedstock over again. We just might need to change a couple of enzymes in the cascade. So we are targeting products that we can make from lignose. And so that can be vanillin, but there's many other different types of biomaterials we can make. But ultimately, as we get more efficient at that beginning process, the learning just gets faster and faster for other industries. With kind of resources just in terms of people, so right now we believe it'll take about 6 to 12 months to generate our first kind of competitive product. With over time, with the learnings, our machine should get faster and our algorithms will be more efficient. We can speed up that, but I do think just a bottleneck of this industry is that it does take time to develop, and then those pilots will take a lot of resources just in terms of every bioprocess will be different depending on what we are creating. And so that is something that when we do start these pilots, making sure that we're not just going for everyone who's interested. We are very strategic with, does this fit with our core mission and our vision at the end of the day? And how does it translate to the next research project?
Just to follow up a little bit, had sort of a similar question that you partly answered, but wanted to hear a little bit more around kind of why vanilla flavor fragrances as the beachhead market, and then kind of understanding some of the transferability, of the enzymes to other materials that you were kind of talking through just now, but kind of curious, like, if it sounds like there's sort of like the engineered bacteria, there's like a support structure, and then there's also like the process. I'm sure I'm like way oversimplifying this, but kind of curious. It seems like the bacteria would have to be sort of re-engineered for like each specific enzyme. Curious if like the support structures are similar, if that's something that like once you kind of have like a framework for the support structure, that's a platform you can kind of plug different bacteria in. So just a little bit about like beachhead, and then that sort of follow up on sort of transferability.
Okay, so beachhead and then process. So vanillin is it is the most common used flavor and fragrance in the world. And so it's an attractive market from the market size, but then also the cost of it. And so that's why we decided to go for it, because just it kind of makes sense from like this size and quantity standpoint. However, one thing that's a differentiator is that there's only a few companies right now who can actually get that natural label for vanillin, versus right now, most of it is from different sources like eugenol. And so a differentiator for us is that we believe by using lignin, we can still get that natural label and then be able to kind of break the market in terms of cost there. So that was something that really stood out to us. And then in terms of kind of our spore system, and so our spores, just to give a little bit more detail on what they are. So the bacteria we use naturally make these spores. And so what Trevor has done during his PhD is he's characterized the outer shell of the spore. And the outer shell of the spore is made of proteins. And he has basically figured out what are the properties of each protein, and depending on what we need, aka do we need to make our system more thermostable? Do we need to make it more stable against different pHs? He knows what enzymes to put on which anchors and where to put them on those protein anchors. And so to your point of how much does, one product translate, we know the characteristics of the spores. So if you say, hey, we have this industrial process where we would like to speed up the reaction by a higher temperature, Trevor can then do the research and say, all right, well, we know these spore coats, proteins are more thermostable. And so this is the one we will bind it to. And so the kind of properties of the spore don't change. We can optimize it, but the spore is kind of the more consistent part of it.
Super interesting. On kind of going a little bit, you started saying your ideal pilot customer. I'd love to know a little bit more about like who that ideal segment is. I know you had some customers listed on that deck. Are those people that have already kind of signed with you, or you already have conversations with, or are they ideal? And then and why? And then the second was just kind of, is there any sort of regulatory risk for you all in terms of moving forward, and kind of what's your roadmap on that?
Yeah, so all the customers that I had mentioned there, we've had at least a few conversations with or have gotten some traction. In terms of the ideal pilot partner, it would be someone who has run pilots before and then also has a big focus on sustainability. And so there are many companies that are chemical companies that are just starting to think about sustainability, but they don't have the infrastructure for pilots. So where they fit in is they will buy the end product. So if we would sell VanLoozen to them, for instance, that's not an ideal partner for us because we would be developing with them. And so the ones that I listed there, ones that have pilot plants, have probably some sort of either fermentation or cell-free capacity and are very interested in renewable feedstocks. And then your second question was, do you mind repeating it?
No worries. It was on the regulation. If you
Okay.
have any regulatory things you need to do.
Exactly. Yeah. So depending on within the flavor and fragrance industry, the biggest two regulations are what deems a product natural and GMO. And based on our research, our product, so Europe is technically the standard here of natural and GMO. From what we've learned, and again, it's a little bit opaque, our product would not be GMO and it would be considered natural. It has to do with how a product is made and the end product being GMO that gives it that status, and there would be nothing GMO in our end product. But that is something within the flavor and fragrance industry that is incredibly important, because the whole point is that we can have a natural label and non-GMO. However, within just creating products from lignin, the regulatory landscape is a bit different if we created a biomaterial or something that doesn't go into our food or consumer products, that people are spraying on their body. So it's a little less of a concern as we go down into more commoditized items, but that's a big issue for flavors and fragrances.
Got it. And then I know you said that this is very price competitive with other natural products, but what about the actual petroleum kind of alternative? How cost competitive is it with that?
So the petroleum alternative for VanLoozen specifically is around $15 a kilogram, 10 to 15. So that was one of the reasons we actually chose VanLoozen, was because the petroleum product is not, it's still cheaper, but it's not as cheap as plastics, for instance. That's like $1. Yeah. And so the $25 obviously is more expensive. We've talked to people and they've said roughly the green premium is around 20 to 30% where customers are willing to pay. Again, that, I don't know if this was a question, but just kind of getting ahead of it, that is a risk to the business, is, finding out with the customers, like, where is that threshold? And, if we don't make it to 25, if it's at 50, is that still compelling? And so that's some of the further research we need to do, because it is a risk with what are consumers and, the consumer packaged good companies willing to pay. We know that it's 20 to 30%, but is that actually the case?
How much vanillin or vanilla extract are you actually going to need to replace per product? I feel like it's a very, very, very small amount. So the premium would actually not be very much of an increase. Or am I way off on that?
No, you're correct. At the end product, if you're buying vanilla extract that's natural, it's going to be way more expensive. However, in a product like a perfume, you probably wouldn't be able to tell that much of a difference if it's, we're selling it for $25 a kilogram versus 50. That being said, it's more of the flavorists that would be buying it in bulk who are then putting it into the products, who are going to be more price sensitive versus then the end consumer, with the exception of vanilla extract, because that's kind of the pure product.
What's to prevent other people from doing very similar things? Is it just the technical expertise that you guys accumulate and continue to accumulate?
Yeah, so from scientific, I'll start from scientific and then I'll go to kind of the business. Obviously so one of our strategies is we have a provisional patent right now that we have exclusive option to license. One of our strategies is that once we spin out, which will happen in May, is filing fundamental platform IP, so that with our spore system, we will patent different variants of different spores from different species. And anytime we put an enzyme on that spore, that is our IP. That's what we will patent. So that's kind of from the protection, the scientific landscape is trying to get background IP as defensible as possible. In terms of product differentiation, I think one thing is cost. That's kind of the whole idea of the bioeconomy, is that there's been these incremental changes, but that's not really moving the market. We need these huge jumps in cost decrease. And so I think that's part of it, is that we will kind of leapfrog fermentation capabilities. The other thing that we are actively thinking of is, and it's honestly the most important part, is what does a product taste like? We were talking to someone and they said, when a consumer buys their ice cream, they want the same experience no matter where they get it. And they don't want vanilla to taste super different from the same brand. And so for us, we're thinking about ways that we can so vanilla is made up of multiple compounds beyond vanillin. So what we're thinking of differentiating is how can we add more natural flavors to vanilla to make it more robust and more interesting and more similar to that Madagascar vanilla bean. And so that's kind of where we think of product differentiation too.
Quick question, kind of coming from the software perspective, definitely interesting to, hear, about the sort of proprietary data around enzymes and anchors, and just kind of curious, imagine that you're going to be gathering data that might be, slightly broader than what you actually end up choosing to commercialize, through a JV or something else. And just kind of curious, if that assumption is right, or if it's super targeted research on the specific things that you're going to be commercializing. If it is right that there will be kind of broader data, are there any sort of thoughts of, licensing the data as part of the business model longer term as well too? Or is it something where it's such a competitive advantage that you keep everything that you're generating in-house? Just curious a little bit how you think about the monetization potential around the data.
Yeah, that's interesting. And honestly, something we haven't really talked about. So we talk about the data from, first we would pull from public sources to do our enzyme discovery, but then as we get more data, bring it in proprietary. I guess what it would come down to is if our data is specifically around our the software is around our spores and the capabilities there, I would imagine that that's something we would want to keep proprietary, just because that's our core IP, is how we make these spores, and then our manufacturing process that translates to it. But there could be a world where we do, maybe we do have a joint venture with somebody and we would continue selling them the data for different products or something like that. It's a great point that, we haven't talked about much, but it's something that we should definitely consider.
I'm curious, on a different vein, how far you've got in terms of developing the product to date. From what I understand, there's a lot of theoretical understanding of what efficiency could look like, what the price could go down to. Could you share a bit, 100% theoretical sounds incredible. Where are you at today? Timeline to improve that number, and maybe going a bit deeper into the raise and what you're expecting to do with the dollars.
Yep. So just to give you a little more context on what the lift was to even understand the characteristics of the spore. So Trevor's in his 6th year of his PhD, and the Department of Energy synthesized $500,000 of DNA for this research. And so it took, about 5.5 years to thoroughly characterize this whole system. Where we are now is we understand the properties of the system, which is super important because now we have the tools to engineer it to any industrial process. B, we've shown with 4 different classes of enzymes that the enzymes have activity on the spore. So what that actually looks like is that we expose the spore and enzyme to like broken down plastics. It's not the like hard plastic form, but it's kind of the first step to show anyone who's doing plastic degradation would do this first experiment to show like, is there activity? Does this work? So we've kind of checked that box in terms of 4 different classes of enzymes and commercially relevant products or processes, I guess. Within that, we have also understood now how many enzymes we can get on the spore, which is a crucial element to our cost, because the more enzymes, spore combination relates to like the functional unit of productivity. And so that's really important to understand, okay, how many can we get on, and then how many are active? What we are going to do before Trevor finishes his PhD is starting to get some data around scale. So he's done shake flasks, which are very manual, versus kind of going more into what it would look like in that commercial process. And so we're going to start doing that within the next few weeks or months before we fully spin out, and just to get some initial data on it. To your second question on what does the raise look like, we kind of think of this, so we're raising 2 million, and we think of it as taking what these initial proof of concepts are and showing the competitiveness of our system by doing some head-to-head tests against, here's a company and this is the product everyone knows, here's how ours compares. And then we also plan on doing liter scaled reactions. And so that's what all of the partners have said, show this head-to-head, show the competitiveness, show that you can do liter scaled production, because scale is super important here and one of the bottlenecks of the industry, and show you can do this repeatably with a few different enzymes. And then that is what would be attractive to sign a potential partnership. And so the raise really enables it becoming a commercial product and process.
And if I can clarify, have you been able to produce vanillin to date?
No. So what we have done is shown that with cellulases that we can break down that feedstock. Vanillin, I believe, uses 3 different types of enzymes. So we've done kind of the initial breaking down the feedstock, which is actually one of the hardest parts of it. And then in the future, once we spin out, we will show the other kind of remaining conversion. And to your point, that is also something that we would need to show, is even if it's just a small sample, get that to these partners, and then they would give it to their end customers to kind of get an idea of, one, the unit economics for the partner, but then what it even kind of smells like for a customer. So that's something that we are thinking about too, is showing a little bit of that end product.
Yeah, I can see how valuable that would be, especially, you're going with the JV option, which is nice and light from your manufacturing point of view, but then puts a lot of onus on having a good partner in order to get to scale. So they need a lot of information upfront before they can commit to investing so much and working with you.
Yeah,
that's helpful. Thank you.
Do you have any of those folks that are, that you've been speaking to? Have you lined them up as potentially like strategic partners in some of this, like these next R&D steps? That's, I guess, one question. And then the other was just like, I think you said this already, but what are the feedstocks? And is there any kind of concern with like supply of them? I know they're way cheaper in this case, so it's not like glucose like it is with precision fermentation, but tell me about what it is here.
Yeah, so in terms of partnerships, we're still very early here. We've progressed conversations to a point where they've said, we've talked to their technical teams, we've talked to the right people, and they've basically said, we need to see these data points to continue this conversation. And so as our paper comes out and as we spin out, those will be continuous conversations. But right now we're kind of at the standstill of, we need more data for them to invest more time with us. The second point is what feedstocks. So we primarily will use lignocellulose from the forestry industry and plastics. Plastics will be kind of the second, lignocellulose will be the first. In terms of issues with kind of the supply chain, there's kind of 2 answers to this. So lignocellulose is made of lignin and cellulose. Lignin is a waste product in the paper and pulp industry. And this is a little bit different from for the vanillin route, but let's say we're going our second product, our third product is biomaterials. One of the issues with scalability in this whole industry is it's not cost effective to actually degrade the lignin. And so people are just either throwing it away. It's hard to find offtake agreements. Many companies burn it for steam or for energy, but they don't need to burn it all. So there's kind of this issue with what do we do with our lignin? And we've talked to paper and pulp companies about this. If we are able to show that we can cost effectively degrade lignin and create products, the supply of lignin is there. It's just the being able to do it cost effectively has been the big issue. Within lignocellulose, that is a concern, especially when you're thinking about biofuels, because the volumes you need are so astronomical. That's why we're not going that direction first. The strategy of doing high value chemicals is that we can make an impact, a meaningful impact with lower volumes. And so there's still a concern with the supply chain. One more thing, and then I'll kind of stop there, is that lignocellulose can come from a bunch of different sources. One of the issues within like the biofuels V1 back in early 2000s was that they were using corn waste, which is not very dense. And so the transportation costs and breaking down were just so inefficient. Wood waste is a lot denser and more efficient. And so in addition to lowering the transportation costs, there's kind of this whole movement towards distributive biomanufacturing, placing the biomanufacturing right by the forests. And so those are a couple of ways that we're going to kind of, we think about getting around that potential issue.
Got it. And then, sorry, one last question was on the lignin. You mentioned that this is like a problem. If you are able to do something cost effectively, is that a new potential source of revenue for you? Have you thought about that as well?
Yeah. So the lignin is actually what makes the vanillin. The cellulose
I meant getting rid of it. Sorry, like taking it off of the paper company's hands that they currently are struggling to get rid of.
Yeah, exactly. And that's what of recently more paper companies are starting to, because as I said before, they're either burning it for energy. And so now they're trying to think of how can we be more strategic with this? And so that is a huge problem. And they're trying to think of, do we make our own chemicals? Do we just sell it? Who do we sell it to? And so that is a problem that they're looking into that we are trying to solve.
Any last questions, folks? It sounds pretty interesting. It sounds very cool. Thanks for taking the time then to present, Emily. And then I would pass the ball over now to David, who is here twice. So let's see which David is the right David. And while I'm getting that set up, David, send me okay, it looks like it's this one. While I'm getting that set up, all of this is brought to you guys by the Startup Tank and Forward VC. For more details, learn more about us, to apply for upcoming sessions. We do this every 2 weeks. If you want to get in front of investors, or if you're considering an accelerator, or really looking to grow, scale, and prove out your climate tech company and get customers, traction, pilots, etc., forward.vc for more details. Now let's see if I can pass things over to David. And David, yes, do you want to take things away, share a little bit more what you guys are doing with Ziggma?
That would be great. Thanks so much. A quick disclaimer, I have to excuse myself. Literally some minutes before this call, my battery gave up, or my charger. So I've just switched to my Mac, and I hope it's going to last me through this call.
No worries. We'll give you 5 minutes then instead of 7, just in case.
Works for me. All right. Can you see my screen?
Looks good. Take it away.
All right. So why do people today invest? Well, the obvious answer is they want to make money, but there is something else. When you ask people, how do you want to invest? Then 85% are going to tell you that they want to invest sustainably, meaning sustainability is really important. So what we've come up with at Ziggma is that we want to build a tool that allows you to do both, to obviously make money when you invest, but at the same time to also do good, to have a positive impact. Now, why is it so hard at the moment to do these things at the same time? Well, our persona Houston basically has got this problem that he's not able to optimize his investment decisions for these two things, returns, but at the same time, impact. And why is that? Well, first of all, it is very hard if you're having different asset classes, different investment accounts, to gain an aggregated understanding of your portfolio. And then the second point is that there is basically no solution out there which allows you to capture both your financial returns and your financial analytics, plus what impact, for example, what carbon footprint your entire portfolio actually has. Now, all this comes at a time where about 89 million Americans are owning stocks, where 11% of them are saying, we're currently voting, but 80% are saying, hey, I actually want to vote my stocks, especially on issues of sustainability, on ESG, environmental, social, and governance issues. So what we've come up with at Ziggma is that we're creating a wealth management app that obviously does both, combining returns and impact. The solution we've got is fairly simple and fairly straightforward. We basically allow users to go through a 4-step journey. Number one, we aggregate all your accounts and allow you to track all your holdings to understand your net wealth. Secondly, we allow you to optimize your portfolio, both in terms of financial indicators as well as in terms of climate or other sustainability-related performance indicators. Third, we allow you to take new investments with good financial decision-making. And finally, we allow you to engage with companies, especially whenever there's things that are not going well, meaning you're observing any kind of environmental, social, or governance issues. So what's in it for customers? There's 3 core value propositions why currently people love what we're building. One, they're in control. They're understanding their wealth, they're understanding where they're headed, and they can make a plan as to what they're spending and saving goals. Secondly, obviously, we help users to optimize their financial returns. And finally, we make sure that everybody has a positive impact on the world. Now, how exactly does that look like in terms of impact? Well, our goal is to reach 17 million users. And most importantly, we want to make sure that over half of them are voting. That means that we would see a gigantic increase in all kinds of ESG shareholder resolutions, which could virtually impact all sustainable development goals. How are we going to do this, and how are we going to reach our customers? This is where we see much of our secret sauce and much of why it makes so much sense from a business perspective to actually combine returns and impact. So what we've seen is that with shareholder engagement projects, we're able to generate huge PR stories. You might have all heard of ExxonMobil, big case where basically pretty small shareholders got together and changed board directors at a gigantic oil company. So we see a lot of room for PR stories. We see also a lot of chance for developing what we call the shareholder democracy, meaning if people start using their stock voting rights, they want to push an issue. By the way, 20% of our users want to actively participate in forming shareholder resolutions. Then that means that they want other people to put their assets behind their resolutions, meaning they're going to ask their friends. Long story short, we believe that we can trigger network effects. Finally, our last channel, partnerships with brokers and activists. We're already working with the first 2 brokers because we also enable in-app trading, hence brokers sending their customers to us. We see a large market, a $27 billion market globally, and we do actually believe that this market is even bigger in the moment that currently people that are not interested in investing for any financial reasons want to start investing in order to have an impact on large corporates. So what we've been building is pretty unique. It's live, up and running with 22,000 users. And on average, these users have connected 500 million, so the total connected assets are 500 million in assets linked, assets under review on our platform. And the average user has about 400K of his net wealth linked to our app. So we believe that we can stand out, or we know that we can stand out with a couple of unique selling points. On the side of financial things, we're able to track fundamental financial company data and ESG data. And on the engagement or impact side of things, we're going to offer monitoring of your entire portfolio and a voting integration, so you can basically vote all your stocks at the click of a button. In terms of the team, we're pretty diversified. Uli has a background in financial services. I myself am a third-time founder now, and the last product I've been building is an engagement management solution for institutional investors. And then Chris and Para are heading our operations on the technical side of things, with Chris being a PhD in computer science and having specialized in databases, and Para being our magician when it comes to financial analysis. We've got some support on advisors, and with that, we've just started to fundraise. So we're not yet fully live with our fundraising, but we have started to reach out to our warm contacts to hopefully close a lead investor in the next week. The timeline then, our MVP is live. We've got the first 1
minute warning.
Thank you. We've got the first 1K in monthly recurring revenues, and we're obviously hoping to be able to scale that with improved marketing and also with improved product. What that means is that we're opening the raise in the next week. We're looking for around 1.5 million in seed funding, and the main cost of that are obviously going to salaries for enhanced product development and to marketing. Thanks so much.
So one question while I bring in all of the other investors. You said the average amount of funds that every client has linked is 400,000. Is that how much they have invested through you guys, or is that like Wealthfront? I've got my bank accounts, etc., so I can track how much money there is in total.
Correct. That's all your Fidelity accounts, Robinhood account, your IRAs, your whatever pension schemes you might own connected to our app.
And then are you then doing analysis on those funds?
Correct. Yeah. So we give you, and that's also where the first USP comes in. We are giving you a portfolio view of your aggregated portfolio, and we do a couple of things that are unique here. For example, what other portfolio management tools are not doing is to actually aggregate. If you're having the same stock in different accounts, we actually aggregate that into one position. So that's one of many kind of unique features.
Okay, understood. And did you mention a business model?
Yeah, so it's a straightforward SaaS as a main income stream. And then we've got also some referral relationships implemented. So we've got a section on our platform where you find, if you're looking, for example, to diversify into alternative investments, then we give you all kinds of alternative investment solutions in the crypto space, arts, wine, you name it. So there is some referral revenues coming in as well.
Awesome, thanks.
I can get us started. So one question was just, so you have just one single subscription tier at the moment, is that correct? There's no kind of like tiering of the different features?
That's correct, with the obvious idea to expand.
Okay. And then can you tell us about like what features are sort of driving the growth of the product? So why are people kind of coming in, and then versus which are the ones that are driving your retention? So from what you've seen from the 22K users, how exactly are they using the app? What features are really the most important? And then I guess I'm sure that there's some regulatory stuff in this case as well. So tell me about kind of any hurdles that are coming up on that. And then, sorry, I gave you like 5 questions at once. So maybe I'll stop there and let you answer those.
I'll start with the first one. So in terms of growth features, what we see is that, and that's, I guess, where I tried to start this with the problem. People don't currently have a full view of all their aggregated holdings and their net wealth. So that is really the, I guess it's a key basic factor that drives most of our users coming. And that's also where, that's something which we can do fairly easily. People connect to a third-party provider, Plaid, they connect all their accounts. And then where the hard part comes in is all the financial analytics, the tracking. So giving people really a consolidated understanding, consolidating different stock accounts. That's something where we see that many companies do it, but nobody does it really well. So that's, I guess, the main driver of growth. And then there is a second one that is unique. We have created a stock simulator. So if you want to understand what is the impact of the next trade that you're about to do, then we're able to simulate that, which is something that institutional investors are obviously doing to understand what impact their trades are going to have on a portfolio level. It is something that is not yet in the market for retail investors. As to the features that then drive retention, we do believe the product is pretty sticky. And the main reason for that is that obviously you want to understand your portfolio over time, to understand the performance of, how did your risk, your diversification improve? Obviously, how did your returns improve? What are your dividends? What is your income? You name it. And again, it is something that many companies claim to do it, but nobody does it at a sophisticated level. So we see a lot of improvement here over competitors. Finally, the part that we haven't talked about yet at all, I guess, and that we also don't see with the competition is the part of engagement and shareholder resolutions. So as mentioned in the beginning, it's just 11% that actually vote their shares. Our own surveys tell us that 80% of the people would like to vote, but it's just too inconvenient right now. If you get the occasional letter for your stocks into your brokerage account, but you don't even get them to your email. So pretty basic features which people are missing, which they would like, and which would really drive the impact that they could have on listed companies. So that is the other one where we believe we see a clear gap in the market, which is going to keep people engaged.
And that feature you haven't already built.
That is something.
Okay.
There is so yes, we do actually have. So for every stock that you own, you can set an alert to get notified when there is an ESG vote coming up. That is something you can do already today. However, what we haven't done yet is that you're able to execute your vote from within Ziggma. So that is something which obviously needs a bit more work on the back end, integration with the voting chain, integration with all kinds of financial intermediaries. And that is something that we just couldn't build for now, given resource constraints. Which leads me to your last question, regulation. Yes, regulation is a topic. It has, for example, to be perfectly upfront here, we have got broker partnerships in place, and we want to work with these brokers, and these brokers would be happy to pay us for payment for order flow. Meaning, if clients are executing their trades within Ziggma, then obviously if we forward those orders to our brokers that are connected to us, then they would be happy to share the profits on that. That is something that the SEC has come down on, which is not possible to do anymore. Hence, that was a revenue channel that we had to cut. For the rest, it could be that in the future we ourselves would, for some reason, like to obtain a broker license. However, that's not on the near-term roadmap, and in that sense, we're also, I guess, for the most part, unregulated.
Could you just have advertising for ESG stocks?
If we can do that?
Yeah, could you just let companies that had high ESG ratings or money managers that had ESG funds or ETFs just advertise?
Yeah. So as far as I know, when you're advertising, then you are a financial advisor, meaning we would need a license there. However, as long as you're simply making assets searchable, which is something that we already do, without giving an investment recommendation, then you're not a financial advisor. So that is something that we can do. Yeah.
Is that a financial recommendation though? I mean, if Google has a paid ad at the top of the search results, are they recommending it?
Clear, no. As long as you're not giving an evaluation as to whether this is a good or bad investment, but you're simply giving, for example, fundamental data about the company, and then obviously everybody has to decide themselves if they believe that's a good investment or not. No, I'm pretty sure that's no concern whatsoever.
Building up on
so
that.
Really interesting. Oh, sorry, go ahead.
Oh, go ahead. Maybe just to quickly build on that, I think I read online that you have a climate score. How does that relate to the recommendation aspect on one hand? And then two, how is that being calculated and how confident are you in these results?
Yeah. So the climate score has got to answer the last one first. How's it calculated? So the climate score is unique in the sense that we are compiling a track record of how the emissions of corporates are developing. So for example, Microsoft might be considered a pretty good ESG friendly company. However, their emissions are actually currently increasing. So overall, their levels are okay and they get good ratings. However, currently their emissions levels are increasing. And that is something that we show because we're not giving you a momentary kind of statistic, but we're giving you a track record over the past 3 years. That's number one. The second aspect that is then really important and that is part of the climate score is whether a company is net zero committed or not. So those are the two main components of the climate score.
Does net zero include greenwashing and carbon credits?
I'm afraid at this point, so obviously we're working with data providers, and I guess as far as these data providers are not able to account for any greenwashing, we also can't, quite frankly.
A couple of quick follow-ups, but first, really interested just a little bit more about like defensibility and sort of folks like Empowerment, like what's stopping them from kind of building and taking market share, sort of in the near term, and then just anything I want to add around defensibility.
Yeah. So first of all, what we see is that, and I know this is a question we've been discussing with Matt beforehand, actually, we've built a couple of features that are unique and that we believe we can build very well because we're both from the engagement side of world, that's where I'm from, and Uli from the asset management side of things, from the portfolio management side of things. So there are a couple of pretty basic features when it comes to the financial management, to the financial side of portfolio management that we have already built and that are unique at this point. The second aspect is then that we believe there is a pretty relevant network effect here, and that is the moment where we're able to once again develop the tools for shareholder engagement. The idea where, by the way, also a lot of other companies are currently gaining traction and are raising relevant rounds, and which is a bit of an up and coming space, is the idea of enabling retail investors to vote. Why is that so important from an impact perspective? Well, quite straightforward. When asset managers or other big institutional investors vote, then there is always kind of a political component, and that is what retail investors do not have at all. So if you are a retail investor, all you care about is that the planet is looking good for your grandchildren, and that just takes a whole complication out of the equation. It's quite straightforward that most of the people today are pro ESG and want to vote according to that. Meaning, if we manage to develop a community around shareholder engagement, then people will put forward, as I said, our own survey, 20% of our users want to actively work on forming and creating shareholder resolutions. So these 20% will try to get assets behind their resolution to make sure that they're successful when they go to the annual general meeting of companies. And that is where we see huge room for network effects and for a shareholder democracy. And that's, by the way, also the reason where we see kind of a clear first mover advantage. So if we're early with this and if we're able to capture this market, then yes, network effects would make for the defensibility.
Makes a lot of sense. And just really quick follow-ups. I love the vision, around sort of removing barriers for retail investors, to become more engaged and kind of proxy voting. Like, I think awesome vision, but I know this is a problem that has kind of existed forever, and just kind of curious, why is now the time that now allowing kind of, is it something that there's a technology integration that wasn't previously available? Is it something where there's a critical mass of, number of folks, that have ESG preferences? Why is now the right time to kind of solve the problem of retail voting?
Yeah, that's a really good one. And I see kind of two parts, two answers. So there is indeed a technical one, and that is that open banking is around since a while. Open brokerage, to make that a sub component, is still to date not perfect, not great. So there is API providers which we're using, and which is exactly the reason why the time is now. Literally, I believe there is a 2021 YC cohort startup, SnapTrade, which we're now going to use to enable the in-app trading. And they are about to launch their product. We're going to be one of their first clients. So this is literally, state-of-the-art technology enablement. I think the second part of the answer, why now, is that if you look at a couple of trends that have been happening recently, so think of Wall Street bets, where people are already kind of organizing in an unstructured format. Think of the sheer amounts. I think it's about 68 trillion that Generation Z and millennials will inherit over the next 20 years. So if you consider, Greta Thunberg as kind of the persona here, these people are serious about ESG investing. And that's, by the way, also something that you see when you look at ETFs and funds. There, all kinds of ESG labeled funds are already the fastest growing asset class. So people do actually put their money where their mouth is by now. And that's why we believe there is a real need. But as Matt has mentioned, there is also a gigantic problem, and that is that there is so much greenwashing going on. So, that is where we see the big differentiator of all kinds of all kinds of sustainable investing solutions that are helping you to select ESG stocks or to go into alternative assets. The problem of oil majors, all other kinds of corporates that we need in our economies and that they're doing important jobs, but that still need to transform. That is a problem we have to solve. We can't run away from by just allocating our money to someone else. These guys will still be around, and so those trends together, to kind of sum it up, that investors are getting more active, financial intelligence is on the rise, Wall Street bets is happening. That ESG is an important topic that's on the rise for new generations that are literally going to feel, most importantly, climate change impact. All these factors combined show us that it's time for this shareholder democracy, and I would like to say shareholder revolution, to happen.
I was just going to ask about, so you talked about the alternative investments. How does that fit into your ESG strategy? Because some people would say that like a lot of those things aren't really like impact aligned. So that's one. And then the other was going to be around, you mentioned the referral model, and kind of, I assume long-term, that's going to be like a pretty important channel for you. So tell us more about kind of the roadmap there.
Yeah. So as of now, we've got, I don't want to give you the wrong numbers, so I'm going to log into our platform and give you the exact one on the side. But there is a bunch of different categories online right now. As to alternative assets and whether they can be sustainable or not. Short answer, the first partner that we've signed onto our platform was Raise Green, so it was actually sustainable investments. Secondly, yes, we've been discussing back and forth the question, for example, are we allowed to offer Bitcoin, cryptocurrency products in general, given the energy that they consume? My personal stance is that if a crypto mine, or in general computing power, is financed or is powered by renewables, then we're fine. So I'm personally not convinced that it's an issue with cryptocurrency. I believe that it is a technology that we do need after all. It's more a question of who provides the energy, and as far as we can solve that, I don't actually see a concern. And I guess, as far as other asset classes are concerned, consider art, consider gold that we're offering. By the way, we've also got a category for getting advice if people are, ever at the end of their kind of personal financial knowledge. So as far as these products are concerned, I see them as climate neutral, no major impact. And then you do have to remind me of the second part of your question. I believe it was about monetizing all this.
Yeah, it was about the referral partners. So kind of moving on from your initial 22K. Right. Yeah.
So what we see at the moment is that, first of all, reaching those partnerships is very easy. So we've onboarded 3 to 4 partners for each category, which, by the way, I'm just counting. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 categories. A few of them I've mentioned already. So onboarding partners here is fairly straightforward. And considering that in financial services, the customer acquisition cost is around $80 to $200 per customer, depending on where you look, also what you're getting per lead. So the cost per lead that we've negotiated with most partners is around $125. That's the average. And working with that is obviously very attractive once we send them meaningful traffic.
Do you pay before or after? Do you pay when they sign up and pay you, or do you pay when you get a lead?
So we get paid when we send them a lead, which is typically defined as a sign up on a landing page.
Okay. I thought you weren't. I thought you were a referral partner. Sorry.
No, we do also use or plan to use affiliate partnerships in the future to actually get clients, of course. So it's going to be a revenue stream for us, but it's also going to be a marketing channel for us. Note that in our marketing mix, I've tried to explain earlier that we really try to build these product-led growth features into our product. Plus that we're planning on doing a lot of PR and content with the shareholder engagement stories, which are going extremely well as lighthouse projects. So we believe that overall, and that's one of the sweet spots of our business, is that we see a very low customer acquisition cost ourselves, and at the same time we're able to generate quite significant referral revenues.
I was just going to say a lot of these strategies seem to hinge on like you having that the shareholder activism features. Yeah. And it sounds like you have like kind of a very MVP version of that now, and the real version is kind of a ways off. Like, is that kind of like, where is that actually in your roadmap in terms of timeline that you'd be able to start a lot of this?
So there is a couple of low-hanging fruits. For example, next week, we're going to send out a voting alert to all Amazon shareholders on our platform because there is an ESG resolution coming up at Amazon. So low-hanging fruits, for example, sending out voting alerts on ESG issues is something that we've already got and where we see significant interest. Anything else that's getting more complicated, which means anything that's kind of considered tools that allow investors to collaborate and to form a shareholder resolution together and then to bring it forward, which is a lot of kind of both research work, but also bureaucratic work, and to provide those collaboration tools. And secondly, to build the tools that really allow us to execute your voting rights from within Ziggma, just like we're already working on in-app trading. Those two features is exactly the reason why we now need to fundraise.
Some questions on the impact side. So far, we've really been talking about sustainability and climate, but then you've also been using ESG when talking about the overall impact. Are you planning to grow into the social and governance aspect? Is there a broader view of impact that you're looking at, or is it going to be solely climate focused?
We've started with climate for the obvious reason that it's probably the most relevant topic we see at the moment. Plus, the second point is that it's the topic where there is most data available, hence you're able to kind of make fundamental decisions data driven. That's much less the case, for example, if there is now databases being developed as human rights indicators, and obviously many social issues, for example, diversity. It's slowly becoming measurable. We slowly get more data on this, but it has been very difficult in the past. So long story short, obviously we want to cover all aspects that we see in this ESG space. However, data constraints and obviously that we need to focus our efforts in the beginning have led us to start with climate.
Got it. And then in terms of the customers that you have today, are you seeing them make different decisions based on the climate score that you have provided?
So it is really hard for us as long as we don't have the in-app trading feature, right? We cannot track what users decide at the end of the day. So it is an analysis that we do not have a lot of insight into. I must admit, quite frankly. So yeah, I wouldn't be comfortable to make kind of a data-driven statement here, just because we don't have that data. What we hear from our customers, from the conversations, is that people do use it as a negative. So in our stock screener and our ETF screener, you can set a lower threshold where you say, hey, I only want to see companies with a Ziggma climate score above 50, and that is something that is very popular. Yeah.
But just to clarify, like, so in that optimization part of your feature set, they can't actually, like, so they can see what, but they can't actually act on that at that stage. And what are there any low-hanging fruit features in that optimization category, not just the kind of view and consolidate category?
Yeah. So when what we do provide is both on an aggregate level, what is your total carbon footprint, plus on a company level, just like there is a fundamentals financial analysis tab for each company, we do also provide you a climate score per company and a climate performance per company. So what in terms of optimization, what we allow you to do is to basically seed out bad apples, both in terms of financial fundamentals plus in terms of climate fundamentals. Does that, I'm not sure if that answers the question.
Just really quickly, on a slightly different note, you mentioned kind of in the slides a B2B channel. It sounds like that's mostly through revenue from partners, not going into like employee benefit plans and things like that. Is that a correct understanding?
Correct. Yeah.
Okay. Are there any plans to kind of go that route in the future, or is it pretty much on the sort of investor side, B2C is the focus?
Yeah, it is clearly B2C focused for now. And considering that we've got so much to do with all the both financial features plus engagement features, it's not on the near-term roadmap, but I love the idea. It's actually something I would love to exchange more and hear what ideas you have. Yeah.
I guess I'm curious because there's a lot of folks in the adjacent space that are quantifying the impact of public companies and helping mostly on the B2B side, portfolio managers make decisions that are more ESG aligned. What prompted you to develop your own score versus, leverage their API?
Yeah. So first of all, I think it is totally valid to add whatever data provider is out there if we needed more of these data. And for example, what I see is that scope 3 emissions are something that is now slowly being added. So that is something where we clearly want to buy that data. The main reason why we've developed our own score is really that we didn't like that Sustainalytics or whoever big name company you look at, they are not analyzing the emissions trend, and that is it is a fairly simple calculation. Regardless, nobody did it, and that's why we saw a need to actually come up with that ourselves, because after all, what we care about is not only the total level, but how a company behaves and develops. So yeah, that was a quite straightforward answer. We haven't found that to date with any other provider.
Presumably you're starting in the US. I just wanted to see like what are your market expansion plans, if any?
Clearly, number 1, US, number 2, Europe, and number 3, rest of the world. The reason for that is the US is the biggest single market. The data are cheapest in the US and best for US companies in the US market. Also, quite importantly, US investors have a strong home bias. So most US investors invest mostly in the US market, which makes it fairly easy. And then Europe is obviously the next destination, also because ESG here, I guess, even though we have lower numbers of shareholders in most European countries, ESG is a huge topic here, and we might be even more ESG aware than many US states or Americans. And then why is the rest of the world somewhat difficult? Well, the way that governance systems work in Asia are entirely different, and also this trend that we see from shareholder capitalism to stakeholder capitalism is something that is not as applicable to, for example, Asian countries, where if the Chinese government is the biggest party and the biggest shareholder anyway, then it's a bit of a different case, I guess.
Awesome. Any last questions then, folks? I think we grilled David pretty well.
Thanks so much for the questions.
And thanks so much for presenting. And now we turn things over to our last segment of the night, the startup of the night. Now we only had 3 companies, but I think they were all very impressive. We vote. Who are your favorites? Volunteers or victims? Who would like to go first and share their 1 or 2 favorites and see if we can find some consensus? Nabila, you look like you want to say something.
I'm thinking the variety is quite broad in terms of who we have present today. I think for me, I'm the most curious to continue the conversation with David and Ziggma. I think it's a bit of a personal bias in terms of shareholder engagement and a shareholder revolution and the power of the people. I will say, David, a lot of questions that were probably too nitty-gritty for this forum in terms of engagement and accessibility for the average user, not someone who's financially savvy, not someone financially savvy and climate interested, you know? So how do we simplify this? It also sounds like, sure, it's nice to know what that I can vote, but then digesting, you know, what is this vote about and how do I determine my position is going to be the next step. So I'd love to understand how you're making that digestion of the information easier and scalable as well. All to say, super interested. Know there's a long way to go and things are early, but I'd love to see how this develops.
I'll say, from putting my fund/personal hat on, I guess, I think Caravel and Emily I'm super excited about the carbon mitigation potential of that innovation. I think just the idea of having an alternative to kind of precision fermentation that's cheaper in general will like really bring costs across the board in synthetic bio down. So I think that idea of like kind of a market-wide impact for if your company is really successful and the science is successful is just huge. So really, really excited about what you all are building there. Yeah, and would love to chat actually after this.
And Gabriel.
Yeah, so it was really great to hear from everybody, and definitely appreciated all of the perspectives. I think putting on the fund hat, though, in areas that we've kind of invested in and, you know, put money behind, allowing kind of investors, you know, to have the tools to channel capital towards, you know, lower carbon, more climate friendly solutions is something we've backed with Carbon Collective. So very kind of pro on that space, and it was interesting to hear more about that. But really appreciated the kind of details around the other folks as well too, and it was fun learning about those approaches as well too, especially the micromobility. Love the idea of kind of having detachable EV capabilities like that as well too. So just a shout out and kudos on that too.
That being said, yeah, Clement, I feel like that's the solution I would use. Like of these, like that's the thing I would be a customer for. So 100%. I mean, I see the market and like it's so obvious to me. My partner is Danish, you know, like bike around everywhere. So I just think like, yeah, I think there's such an obvious market for the solution. And like, I think Matt said, it seems like a no-brainer. So I think if I were putting like my purely like, where would I want to make money? And I'm a customer hat, I would choose Clip. But I think like putting my fund hat on, I see the biggest decarbonization potential, Caravel.
And then I mean, I liked all 3 companies. I'm not entirely sure in terms of for the accelerator, if any of them would necessarily be the perfect fit for us. I don't think we're going to get to a consensus either way. I liked Clip in terms of, again, as a user, I could very much see that. I could see Ziggma as a venture investment, although my biggest challenges or questions are going to be around the defensibility and the scale, because, well, when Robinhood adds voting and has an ESG tab, then what happens? And then Caravel has the huge risk in terms of the actual scaling up on the production side of things, being able to make things work. And that's not necessarily something that we can help very incredibly with on the de-risking side. So I would say we have 3 companies that were awesome. I don't think it sounds like we have a consensus on which of the company was the most awesome. Should we just say everybody was solid and we have all winners and losers today?
Sounds good.
Awesome, folks. Thanks for tuning in. I hope this has been fun.
Thank you so much.
If you'd like to pitch on an upcoming session, just the startuptank.com. You can find us there if you're watching on YouTube. Now or in the future, hit the subscribe bell. We're also on all your major podcasting platforms. Find us there, subscribe so you don't miss a thing. We have a newsletter where we share information about this, our accelerator, other kind of beneficial things for both climate founders, climate investors. You can find all that at forward.vc. Climate investors that want to be in our database or in our deal share memos, check it out as well there, just forward.vc. And we've got a database for founders if they're trying to raise money and find the ideal investors, forward.vc/VC database. You can find it all there. Folks want to share more about you and where's the best place for people to find you. Nabila, you want to go first?
Sure thing. Thanks, Matt. You can find out more about the Pollinator Fund at telus.com/Pollinator Fund, and where you'll be able to reach out to me directly, and I'll be dropping in my email chat as well.
Awesome. Gabriel?
Yeah, so if you'd like to learn more about Powerhouse Ventures, it's powerhouse.fund/ventures. If you want to get in touch with me, it's gabriel.vanloozen at powerhouse.fund. I'll also drop that in the chat.
And I guess I'm next. Carbon13, you can find us at carbon13.com. And my email is just puja@carbon13.com. So I will drop it in the chat afterwards as well. And I'll just put the last bit in there is that we put like our Accelerator is actually accepting applications till tomorrow. It's not probably the same as Forward because we don't do any companies that have like raised equity investment in the past. So we like to be first checks. But if that sounds like you and you have an early stage climate tech fund, a climate tech startup, please do chat with me.
Yeah, they do great things over at Carbon13. And if you guys are looking to network as well, so more fun and goodies at forward.vc. We've got a climate VC and a climate founders Slack communities, about 2,000 in total. Go hop on in there and meet other people who can be helpful. And if you want to pitch, you want to apply, you want any of the above, just forward.vc. We invest in companies that move the world forward. Thanks for tuning in, guys. Thanks everybody for pitching, sharing what you're doing. You did I know it's tough to get in front and pitch to a big crowd of people, but you're founders, so you kind of opted in for this. So you better suck it up and learn how to be awesome. And now go build cool businesses and do cool shit, guys. Sound good?
Thank you much.
Cheers, everyone. We'll talk to you later. Have a great one, great night, and dinner time for anybody in Europe. Cheers.